What we're going to be going over here is available for sale securities as a stock portfolio and how it affects our comprehensive income here and the reclassification adjustment that may be required here when we're dealing with these available for sale securities. Okay, so what we're going to have here is we're going to have this following portfolio here of available for sale stock securities here. And we're going to be, what we have to do here is at the end of each reporting period, the end of each year here, when you're dealing with these available for sale securities, you're going to have to determine any unrealized gains or losses that you'd have for them. And we're going to be looking at 2 years here, the end of year X1 here and the end of year X2. So what we're going to have here, this is what we're going to look at. We're going to have 3 securities here. We're going to have stocks A, B, and C, and we're going to have to determine the unrealized gains and losses on these stocks. But what we're going to concentrate on here is stock B here, because stock B is going to be sold here and it's not going to be included in our second year here that we're looking at here for these available for sale securities when we make our calculations. So let's first off go and look at how these unrealized gains and losses would be calculated here. So just looking at stock B here, say it had a cost here of $20,000 and at the end of the period, the end of the year here, we determined its fair value was $18,000. So fair value less than cost, so there you'd have an unrealized loss of $2,000. And then if you look at stock C here, its cost is $40,000, but its fair value is $41,200, so fair value is greater than its cost, so you're going to have an unrealized gain here of $1,200. Okay, so doing what you're doing with these portfolios here, you just take your total cost. So you're just summing up your total cost here for all 3 stocks. You get $100,000 worth. Fair value, again, at the end of the period here, summing their amount here, that would be $97,200. So comparing the difference, fair value with the cost here, fair value is less than the cost here of $100,000. So there we're going to have an unrealized loss of $2,800. Okay, so now for our adjustments here. Well, we didn't have any previous adjustments. We just bought these securities during the for the year here. So the only adjustment we have to deal with is this unrealized loss here of $2,800 on our portfolio stocks. Okay, so now going down to our second year here, the end of year X2, we have to. This is the case here where that stock B was sold, so it isn't going to be included in our securities, and we didn't buy any other ones either. So all we got is stock A and stock C here. So what we do here to determine any unrealized gains and losses, the same as we've done up above here. All we do is take total cost here, those securities here is $80,000. Their fair value here, total amount, summing that up is $79,600. So our fair value here is less than our cost, $79,600, cost of $80,000, so we're going to have an unrealized loss again here of $400. Okay, so now this is the case where you have to make a fair value, securities fair value adjustment here for the end of year X2, and that's going to be $2,400. And this is how we go about doing that here. So we take our whatever we had in our previous adjustments up here, and in this case it was the $2,800 loss, we just bring it down here and figure it into our current year here. So we have the $2,800 previous unrealized loss here for year X1, and we have to get to $400 here for year X2. And let's look at how we do that here. So this is our fair value adjustment, how we go about doing it. In this case, it would be a credit or reduction. $2,800 unrealized loss here would start out end of year 12/31 X1 here, $2,800. We have to get down to $400 here for the current year here, X2 here. And the way we do that here, you can look at it easily with your debits and credit amount. So we have $2,800 here. The only way we can get down to $400 here is debit or increase our fair value adjustment on those securities here for $2,400. So that's our fair value adjustment here for the securities that are remaining here, stocks A and C here, $2,400. Okay, so now let's go up and let's look at how we'd record this and how we're going to deal with these realized and these unrealized losses here. So what you do here with these available for sale securities, you have to set up this investment account here, title it Available for Sale Securities, and that's at its cost. That's the whole portfolio that we're looking at here. So we would have debited our amount here for $100,000. That was at cost here at 12/31 X1 here. And The other thing we're going to have to do is we're going to have to set up a fair value adjustment account here, and then based on that fair value adjustment, this is where we're going to recognize any unrealized holding gains or losses here, and that's going to be part of our equity account. But before we do that, we're going to deal with this stock that we sold here. So we sold stock B here and had a cost of $20,000, so you'd credit or you reduce your available for sale securities by that amount here. And then moving over to our cash account here, well, for our case here, we sold it for $19,000. So we'd debit or increase our cash here for $19,000. So the balance here, we're going to recognize as a loss on the sale. Again, for this available for sale securities, that would be debiting or our loss here would be at $1,000. And this is what we're going to have to note here. This is going to be a realized loss here on the stock that's sold, and that goes to the income statement. So I had a cost $20,000, only received $19,000. So we have the loss or the debit amount here of $1,000. Okay, so now let's move down to this fair value adjustment here, and let's get at what we're going to have to do here. Now, for that first year here, we had that unrealized loss here of $2,800. So we'd have credited our fair value adjustment here by $2,800. And if we didn't go into it, this fair value adjustment account here, that is a valuation account, and that directly increases or reduces our available for sale investments here at their cost. So instead of making our adjustments directly to our available for sale account here, we set up this valuation account here, fair value adjustment, and that's what we adjusted those securities, their fair value here at the end of each period here. So for 12/31/X1, we would have credited that here for that unrealized loss here of $2,800, and then we move over here, and this is where we're going to look at both unrealized losses and gains here. And what we would do, this is unrealized, and that's an equity account here in a balance sheet. Nothing goes into the income statement at this point. So credit here for $2,800, then we debit or reduce our unrealized holding amount here by $2,800. That's for 12/31/X1. Now we're going to move into the end of year X2 here. But before we do that, let's make a point here. This year, at end of year here, this $2,800 unrealized holding a loss in this case here, that included that loss on stock B here. We actually lost $2,000 here on stock B, and that was included here in our figure here for the end of the year, first year here. So just to make a point of that here. Now looking at year X2 here, well, that was where we had to have that adjustment here for $2,400. We had to increase our fair value adjustment here for $2,400. Our account went down to we had a loss of $400, unrealized loss of $400, but we had to make the adjustment here, debit or increase our fair value adjustment here by $2,400. And then the credit would go to the unrealized holding. In this case, it was a gain here of $2,400. So what we're going to be looking at here is for this comprehensive income and the adjustments that we have to, we're going to have this reclassification adjustment. We're going to be looking at the end of year X2 here. So let's look at what we have here for year X2. Now this would be for year X2. We had that realized loss here going to our income statement, and that would be going directly to our going to our net income here. We'd reduce that here by $1,000, or that was the loss here. And then we're dealing with an unrealized holding gain here in this case of $2,400. That doesn't go to the income statement. That's sitting here in our equity account. Okay, so what we're going to go down here, and we're going to look at how to record this comprehensive income. But before we do that here, the comprehensive income for year X2 includes both this unrealized holding gain here at $2,400, and that we're showing here, that unrealized holding gain here, but it also includes this realized loss here of $1,000. So with the available for sale securities, you have both of those components in the comprehensive income here, and that's, you're looking at year X2 here. It got the realized loss here on the sale of the stock for $1,000, and then we have that unrealized gain for the fair value adjustment here for the end of the period here in year X2. Okay, so now let's go down and let's look at this statement of comprehensive income. Again, that's at the end of year X2 here. So let's just look at what that would include here so we understand what's going on. So that would be, we start out with our net income here, and let's just say it was $500,000, but that includes the loss here, that realized loss on the sale of stock of $1,000. So had we not included the loss here, the realized loss, it would actually be $501,000 here. But we have to subtract out the loss here of $500,000. Now, when you're dealing with this comprehensive income, we start with our other comprehensive income. And what that amounts to is the total holding gains here. And what we're talking about holding gains here, in this case, because we sold that stock off here, that includes the realized loss here of $1,000. So our other comprehensive includes that realized loss here of $1,000, but it also includes this adjustment that we made, this unrealized gain here of $2,400 for the year here. So for other comprehensive income, just the way you figure that here, you have to figure your realized losses. Now that's only for the stocks that are sold or bought or whatever. You have to figure that in here. And in this case, we had a $1,000 loss. And then that other amount here, that was for the unrealized amount, that was for valuating our stock portfolio here at the end of the year here. That was that $2,400. So the net amount here, $2,400 reduced by the loss, you're only going to go up for your other comprehensive income is $1,400. Okay, so now here's what we have to do. This is where this reclassification adjustment comes in here. And what you do here, you have to do this. You have to use a little common sense here, but you have to determine your gains and losses here. So the reclassification adjustment for the loss is to eliminate the loss that's included in net income here. So we had a loss here. Included in our net income here was that $1,000 loss here. But when we're dealing with our adjustment account, we have to adjust for that. So we can't, what we have to do is we have to add back that loss here, $1,000, to our holding gains here, what our other comprehensive income here, $1,400. So we have to reclassify it. We have to take care of this loss here that we have. We can't count it twice here, but we have to add it back here. So adding it back here, you come up with your total amount here of $2,400. So your loss here, well, that would be your total other comprehensive income after the reclassification adjustment. Any gains or losses here, and let's make a, okay, so let's first look at that here. So $1,400 plus the $1,000 gives us $2,400 here for other comprehensive income, and that's with the adding back that $1,000 loss here. So they cancel each other out here. The reduction to our net income here for $1,000, with the adjustment here, we cancel that out here. We can't count it twice here. So we added back the loss here, $1,000. So what you're going to do here, when you're using these reclassification adjustments here, when you have those sales of stocks here and you're having those realized gains and losses here that are sitting in this other comprehensive income here. So if the rule is here, if you have a loss here and it's included in your net income here on this case for those available for sale securities that were sold, you would add back any loss here. Now, if you had a gain up here in your net income going for any realized gains here, then you'd have to subtract out those gains here from your other comprehensive income. So you'd have to subtract out gains here. So that's just the only rule you want to go with here. So for our comprehensive income, this is what we wanted to get down to here. So that includes our other comprehensive income with the adjustments here, $2,400, and then we add it to the net income here of $500,000. So our total comprehensive income would be $502,400 after that reclassification adjustment. So just remember the rules here. The reclassification adjustment, for any losses, you have to add those back here. Any gains, and when we're talking about gains, that's what's included here in your net income amount. You would be subtracting those out. Now, if we look at it in these terms, in 20X1, Corporation A included unrealized loss on stock B. In their comprehensive income. That would have been included. We didn't go through the calculations or show the statement for comprehensive income, but for 20X1, the end of the year here, the unrealized loss on the stock, any unrealized loss in stock would have been included in their unrealized losses here in the stock and their comprehensive income, and that was that $2,000 loss that we're looking on that stock. And in 20X2, the stock was sold here. It would be reported, and it was reported as a realized loss in net income, which reduced our comprehensive income again. So comprehensive income, if we go up and look at that, that included our net income here by loss here on the stock reduces our net income, and in effect it reduces our comprehensive income as well here. So to avoid double counting this loss, make this reclassification adjustment. So just remember, make those reclassification adjustments when you're dealing with these available for sale securities here, because what you have to take care of this realized loss here versus the unrealized gains or losses here. So you're looking at the realized versus unrealized gains or losses here in that holding account here versus any realized gains or losses here. So yeah, you have to make that reclassification adjustment. If you go through the arithmetic and use a little reasoning here, you'll see why you have done it. So in this case, those holding gains didn't only include the unrealized amount here, but it also included the realized loss in this case. Okay, so just remember, make that reclassification adjustment here if you've had any sales here and is available for sale securities. So if it's a loss, you would be adding any loss amount back here. If it's a gain, you'd be subtracting it out here from your total holding gains. Okay, so that'll take care of our discussion here on these available for sale securities. And we were dealing with a stock portfolio here, and we had to deal with this comprehensive income and any reclassification adjustments. So those are general outline here and how you'd handle your comprehensive income here when you're having to determine your comprehensive income here with any total holding gains here and your net income when you have those gains or losses.